$600 billion. That's the potential cost South Korea faces in the wake of a new aggressive American trade policy. This isn't just a number. It's a crisis unfolding in real time, threatening global supply chains and thousands of jobs. The Trump administration has demanded South Korea deposit $350 billion, over 80% of its foreign reserves, into a US-controlled fund. This coercive move has sent shockwaves through financial markets, raising questions about sovereignty and economic warfare. The remaining losses come from Korean companies slashing US investments, declining trade, and the immense cost of relocating or shutting down operations. Businesses that once saw the US as a stable market now face tough, expensive choices. This is more than tariffs. It's a fundamental reordering of global economic relationships. The $600 billion figure is a headline for a deeper story, one of political pressure, strategic realignment, and real human consequences. From Seoul's boardrooms to American factory floors, the tremors are everywhere. As of October 4, 2025, the situation is volatile. The decisions made in the coming weeks will determine if this loss becomes reality. The economic landscape for years to come hangs in the balance. The crisis is the result of a dramatic policy shift that shattered years of trade agreements. The U.S. South Korea Free Trade Agreement once allowed seamless trade, but that era is over. In March, the Trump administration imposed a 25% tariff on Korean car imports, far higher than those on Japan or Europe. Korean automakers were instantly disadvantaged, nullifying the benefits of KORUS overnight. By July, the White House announced a blanket 25% tariff on all Korean imports, effective August 1, unless a new deal was struck on U.S. terms. No extensions, no negotiations, just an ultimatum. This aggressive strategy has upended the foundation of the U.S.-Korea economic partnership. Companies must now rethink their global strategies amid profound uncertainty. The old rules are gone. Economic alliances now shift with political wins. On September 4, 2025, the trade war turned personal. U.S. ICE agents raided a Hyundai-LG electric vehicle battery plant construction site in Georgia, the largest single-site raid in agency history. The project, a symbol of Korean investment in America, ground to a halt. 475 workers, mostly South Korean engineers and technicians, were detained, many on ambiguous visa grounds. The raid exploited legal gray areas, sending a chilling message to foreign investors. The consequences were immediate construction suspended, the future of a multi-billion-dollar project in jeopardy. This plant was central to America's EV ambitions and promised thousands of jobs. Now it's a casualty of the broader diplomatic conflict. The raid is seen as intimidation, a tactic to pressure Korean corporations and their government. It's a flashpoint where abstract trade disputes collided with real lives. The stakes are higher, and a swift resolution is now even more elusive. The human and economic costs are mounting. Korean corporations are pivoting fast under tariff pressure. Hyundai is leading the charge, shifting production to the US to dodge tariffs. By 2030, Hyundai aims to build over 80% of its US vehicles locally, double its current rate. The company is investing $26 billion between 2024 and 2027 to expand US operations. This includes a new steel mill, robotics facility, and a $5.8 billion plant in Louisiana, now shadowed by political uncertainty. In November 2024, Hyundai appointed Jose Munoz, its first non-Korean CEO, signaling a new focus on the American market. Munoz's mission: build the most advanced manufacturing ecosystem in the US. But this is a high-stakes gamble, driven by political pressure, not just market logic. Billions are being bet on localizing production to survive. Yet there's no guarantee Made in America will shield Hyundai from future policy shifts. The company's future, and thousands of jobs, hangs on this risky bet. The outcome will define Hyundai for decades. Behind the headlines, workers are paying the price. In new US plants, Hyundai relies on temporary workers, paid less and with fewer benefits than unionized staff in Korea. A temp in Georgia might earn $40,000 a year, less than half a regular Korean auto worker's salary. This two-tier system creates job insecurity and tension, keeping costs down but leaving workers vulnerable. As production shifts to the US, Korean factory jobs are at risk. Each American-built car could mean one less job in Ulsan or Asan. Layoffs and downsizing loom in Korea's industrial heartlands. The global labor divide is widening, with companies squeezing costs at workers' expense. The human cost is measured in lost paychecks and growing anxiety. Workers on both sides of the Pacific are caught in a conflict far beyond their control. Their futures are being shaped by decisions made in distant boardrooms and government offices. The trade war has sparked an unexpected boom: South Korea's used car export industry. As new car exports to the US plummeted, used car exports soared, turning surplus into profit. In August 2025, used car exports hit a record $711.5 million, a 35% jump from last year. Over 437,000 used cars were exported in the first half of 2025, worth $3.9 billion. The market's focus has shifted from the US to Russia, Central Asia, and the Middle East. Demand in Russia surged after Japan restricted its own used car exports, and Korean exporters filled the gap. The boom is so significant that lawmakers are pushing for regulation and support. Heo Jong-sik, a South Korean lawmaker, calls for government action to manage this new export pillar. Experts predict that if US tariffs persist, global car prices will rise, fueling further growth. The used car market, once secondary, is now vital to Korea's export economy. Crisis has bred unexpected opportunity. The trade conflict has sparked international labor solidarity. In July 2025, the Korean Metal Workers Union and United Auto Workers signed a pact for mutual support. After the ICE raid, both unions condemned the action, framing it as an attack on workers' rights. Christine Peter of the UAW vowed to push for binding labor protections in future trade deals. Yet, challenges remain. Korea's unions have struggled to organize temporary workers, weakening their bargaining power. A new law in 2026 will let temps negotiate directly with manufacturers, potentially transforming the labor landscape. The union's success depends on bridging internal divides and leveraging new rights. Their alliance could reshape labor standards on both sides of the Pacific. Experts offer crucial insights into this standoff. Dr. Sun-Hyung Lee sees Korean investments in US factories as strategic diplomacy, building goodwill and political protection. Shin Hyun-do highlights the used car export boom as a structural shift, not a temporary blip. He predicts continued growth as long as US tariffs remain. Christine Peter of the UAW stresses the need for enforceable labor standards in any future trade deal. For her, real protections, not just promises, are essential to prevent a race to the bottom. Lawmaker Heo Jong-sik calls for government action to support the used car sector, now critical to Korea's economy. US policy is forcing Korea to rethink its industrial priorities. Domestic policy is being reshaped by international pressure. The stakes are global, but the consequences are deeply local. The US-Korea relationship stands at a crossroads. The $600 billion at risk is a stark reminder of what's on the line: partnerships, supply chains, and livelihoods. Korean businesses are making costly, high-risk moves just to survive. These are not signs of a healthy alliance, but of an industry under siege. Instability and political risk now define the landscape. Real people, detained workers, anxious employees bear the brunt of this conflict. The labor alliance is a demand for workers' rights in future trade deals. This is a cautionary tale about the fragility of global integration. Decades of cooperation can unravel overnight. The choices made now will shape the global economy for years to come.